Hi, I'm Larry Wolf, and this is my partner, Stuart Gross. We're from the law firm of Roberts and Holland, and we're going to talk today about the new tax law, which was enacted at the end of December of last year. As with most tax legislation, there are winners and losers. Real estate as a whole is considered one of the winners. And we're going to walk through the topics that affect individuals and real estate in particular.
Although, of course, with a $1+ trillion deficit impact, there were more winners than losers in this one, Larry.
This tax legislation was put through in sort of a rush. We're going to need some guidance from the Internal Revenue Service or from Congress to help fix some of the mistakes and to answer some of the questions that are raised. So the first thing we're going to talk about is changes in tax rates. The corporate tax rate was reduced from 35% all the way down to 21%, and that's a permanent change. The individual rate was reduced from top rate of 39.6% to 37%. Other changes we're going to talk about didn't get the same permanent benefit that corporate changes got, and will phase out or be eliminated after 2025. The rate on dividends stayed at 20%. The rate on capital gains stayed at 20%.
They also made some changes in the bottom brackets, and tax liability at a given level of income, $100,000, $200,000, $300,000, is actually lower even before you get to the highest rate. They also played with the marriage penalty so that at the lower brackets, they basically eliminated the marriage penalty, and that will put additional dollars into people's pockets as well.
They did a couple other things in this regard. They eliminated miscellaneous itemized deductions. So tax preparation.
You're going to tell me what a miscellaneous itemized deduction is?
Go ahead, Stuart.
The most important miscellaneous itemized deductions, expenses for tax preparation, also investment expenses, people who invest in various investment vehicles that give rise to so-called investment expenses, previously were deductible to the extent that those expenses exceeded 2% of adjusted gross income. That was an annoying calculation. Congress felt that abuses were going on, and so through the end of 2025, those expenses as deductions were eliminated entirely. And there's a group of other deductions. I think those are probably the two most important.
The standard deduction that you can take if you don't itemize deductions has been increased. So for an individual, it's $12,000, and on a joint return, it's $24,000. The concept of personal exemptions has been eliminated, so you no longer have the ability to claim personal exemptions.
That actually sounds like simplification.
This tax law is not simple. That was simplification.